Hello everybody, this is Joshua Hayes at BigWaveTrading.com coming to you with November 11th stock market wrap-up for you to use for November 12th. Let's go ahead and start with the S&P 500. First off, what I want to show you here is the long-term picture of where we're coming from the highs in October. If you look at the S&P 500, and any index for that matter, you can see that it's been in a clear downtrend the entire way. That means that being long has been wrong all year long. And those people that have been telling you to buy stocks have done you a very huge disservice. And that can now be seen with the S&P 500 down 42% year to date. Now, I want to go ahead and get close up on this so now I can show you on the short term. As you can see, since the October lows, we are in a kind of lateral congestion consolidation phase right here from October to November. And we could resolve to the upside. As you can see, the taller bars here are green. Even though volume is going lower, as long as we base out for a prolonged period of time, it would be semi-bullish. Now, today was a negative day, down 2.20% on the SP 500. But do you notice something the past 4 days here? There's a mini tail here, a full open body candlestick here, a bullish tail. Let me even go one step closer so you can see it. A bullish tail here and a bullish tail here. This signifies that as stocks are dropping down to their lows of the day, there is mini support that the market is finding. Now, this might not be long-term bullish, but short-term, it might lead to a condition where we could see a rally. I am listing more and more stocks in stocks that I'm watching for possible future longs. The charts are not pretty, but they are there. And the fact that the stocks are there and some are starting to show up gives me confidence that in time we can resolve to the upside. And while we wait for that to happen, I've given you many shorts that have produced big gains. And as you can see today, I'll post in the commentary the returns from the shorts. Those kind of returns since March is big and has made a big impact on my portfolio, even though I'm not 100% short. Even though the most short I ever got was 20%, just those little bit of shorts has helped give me almost a 25% gain year to date in my main account when the market is down 42 to 45%. Kramer's Action Alert portfolio is down 38%. So we have to look at things in the right, area. And if you just listen to me and stayed in cash all year, you're flat. So you're flat because I kept on saying cash is king. Active traders could be active, but if you were just relaxing, cash was king. 0% is killing 42% or a negative 38 or negative 42% or a negative 38% gain. So just keep that in mind, that even if you have a 10 or 20% loss, you are beating the market handily. There was a hedge fund that blew up today. I think I saw somewhere it said it lost 76%, but then somewhere else I saw 98%. Either way, let's just say that they only lost 76%. That's 50% way too much, at least in this kind of market. Like I said, I can see big funds losing 20 to 25% because it's a rough market. But being down 50% to 75%, much less 90+% if you're on margin, that's ridiculous and just shows that there's no sell discipline, there's no cut loss strategy, and that's how you make the big money. Now, before I wrap up, let's go and look at the rest of the indexes. Look at the Dow Jones Industrial Average, and you can see the same thing. Mini tail, open body bar, a bullish tail for a down day, and a bullish tail for another down day. Volume is also below the 50-day volume average, which means there isn't a ton of selling. The lower volume is good. Let's look at the NASDAQ 100. You can see similar things the past 3 days. You can see many tails showing up, and that to go along with the open body bars and tails in October might indicate that we might want to try to base out here and work on some upside. It'll take a while for charts to show up, but this is better action than the action we saw in September to mid-October. The action since mid-October has been much better, even though volume is declining. But it's fine because it's a pullback. And there's the NASDAQ. You see the open body bar. You see the tail, the tail, the tail, all the tails here, and the open body bars after the ugly sell-off and heavy volume. And like I said, the low volume now is a positive. One great thing to see, look at the United States dollar. I showed you yesterday how it was in a flag pattern that I expected to resolve to the upside. This is what I drew yesterday. Let me draw that there. And now let me get in really tight in it so you can see. And as you can see, the triangle pattern, the flag pattern, resolved itself to the upside right here with a 1.23% jump. So here's what it looked like yesterday. There's the pennant, the flag. It's not a pennant. What am I talking about? It's a flag pattern. There's the flag pattern. Boom, breakout. Boom, breakout. Boom, breakout. So the United States dollar is very strong here, which is killing foreign countries. So that's why the world economy is not doing well. But if you're in cash, you're doing very well right now. And since it took the 250-day moving average, the dollar's up 16.9% since August. And in the futures market, that's a big, nice gain. So it's a nice resolve to the upside. It's bullish. So the dollar's good. The market's bad. The market will change eventually. We just have to stay positive. Anyway, this is Joshua Hayes at BigWaveTrading.com saying aloha.